Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to talk about gap trading, but more importantly, we're going to talk about how to turn a 1% losing trade into a 6% winning trade, and I'm going to show you exactly how that happened today with gap trading and my strategy with the morning gaps, which I teach in a course at LazyGapTrader.com. We're going to go over the sequence of events, we're going to go over the trade, we're going to go over the performance, and we're going to cover everything under the sun as it relates to gap trading, specifically the morning gaps, and why it's absolutely the single best day trading strategy available in the market today. As most of you know, I teach a course where I teach two gap trading strategies. One is the morning gap trades, and the second are gap fill trades. And in the morning gap trades, for those members that want to receive them, I offer a subscription to my gap trades each and every day that comes out in email at 9 a.m. in the morning. So let's take a look first at the email that went out this morning on a specific trade, the one you're looking at on the chart, which is Mobileye, MBLY. This comprised two trades today, but one was a losing trade and one was a winning trade, and I want to discuss them in detail and exactly what happened. So here's the email that went out first thing this morning. We had 4 possible trades, and then I followed it with another email because I took stars off the table because it was a buyout, and we don't want to trade buyouts. I didn't realize it at the time. So there were really 3 potential gap trades today. Mobileye, Darden Restaurants, and Brixmor Properties, BRX. Darden, DRI, and BRX, they didn't hit their gap levels, which mean the stock didn't come into the level we were interested to either buy or sell short a stock. In this case, they were gapping lower, but they never got low enough for us to get interested in purchasing the stock because we know if it doesn't come to our price level, we don't have a high enough probability to give us a high enough winning percentage, which we're going to talk about in a minute. But Mobileye did hit its number. And here, this was a short play because the stock was gapping higher at the open, higher from yesterday's close. And I say here, resistance levels are $46.50 and a second level at $48.85. And then I specify stop and profit target is about 50 cents. And in terms of a profit target, my members and those that have taken my course understand that's a minimum profit target, and I teach in my course exactly how to maximize the profit on a winning trade. Now here's a 10-minute chart of Mobileye, and as you can see in the first 10-minute candle of the day, the stock went right through the $46.50 area, only to come back and retrace to it, and what happened was, we know that in the market, what was once resistance becomes support, and what was once support becomes resistance. And you can see that here evident in Mobileye because you can see how the stock came back to test the $46.50 area even after it blew through it. You can see that that level does have importance. The market is based on mathematics, and that's what I teach you in the course at LazyGapTrader.com. But here's what happened. So we took a stop out on Mobileye of 50 cents. Okay, that's about a 1% loss. But as you can see, not too long after, Mobileye creeped right up to the secondary level. You can see that evident on the top trend line on the chart. You can't see the number on the left, but you can see the purple line, the second purple line. That number is at $48.85. Mobileye made a high for the day at $48.97, only 12 cents above our recommended shorting level. And then you can see what happened for the rest of the day. Mobileye traded lower, making a low for the day from the high down about 6.5% from this level all the way up here where we enter the trade on the short side to all the way down here where it made its low for the day after that high. The point I'm making is gap trading, the way I teach it, is a very mechanical process. The way I teach it, it's a very repetitive and repeatable strategy or methodology. We have a specific winning ratio or winning percentage, and I'm going to show you that now. So this is my trade log, and you can see here the total number of trades, and this is just since the end of January when I began tracking this and offering it as a service to the public. I've been doing this for years, and I know that this winning percentage that you see here at 75%, I know that that stays relatively consistent. Sometimes it's 76, 77, 75, 74, but I know it's going to hang around there for the most part because it is a repeatable and fantastic strategy that's going to produce those results if you follow the rules. In my course, I teach the rules. As you can see, we have a 75% win rate on the trades that hit our price levels where we're interested in taking either the long play or the short play. The average winning percentage per trade is over 3%, and the average losing percentage per trade is just over 1%, and you can see the final cumulative numbers in wins and losses at the bottom, 230% against 25%. You can make money using this strategy if you follow the rules and use the strategy properly. I'm happy to teach it to you. Come over to LazyGapTrader.com. Check out what we're doing, see everything you can learn about the course, take the course, learn the strategy, and profit for the rest of your life using a methodology that works over and over and over again. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.